going on, investors? I try to bring you videos on companies that don't always get a lot of traction here on YouTube, but they have the potential to bring us great returns and make us a lot of money over time. Or I can just make daily videos about AMC stock, as many people do. Just let me know in the comments which one you prefer, and also let me know your Chipotle order, as I'm always wanting to try something new. Today I'm going to be giving my stock analysis on Chipotle Mexican Grill, ticker symbol CMG. I heard they also have this promo where if you hit that like button, you get one free side of guac, but it's only available for a limited amount of time. Chipotle was founded in 1993 in Denver, Colorado, though in 2018, they actually moved their headquarters to Newport Beach, California. Yes, I know, some companies actually do it the reverse way. They actually move into California, not leave it. The name Chipotle actually comes from a Native American tribe's name for a smoked dried jalapeno, which they called a chipotle. The founder of Chipotle was Steve Ells, who opened his first store with a small loan of not $1 million, but $85,000 from his father. They figured they would need to sell about 107 burritos a day to become profitable, but Steve would find out that demand was almost instant, as they were selling over 1,000 burritos a day, and the rest was history. As Chipotle continues to open up more and more stores, I think many would actually be shocked to learn that not one of the nearly 2,800 locations are actually franchised out. Nope. Chipotle actually doesn't follow a franchise business model like many other fast food restaurants, because they feel it takes away their power to be able to create a company culture and commitment to sustainable ingredients. Hard to believe based on what they sell, but McDonald's was actually an early investor in Chipotle and helped their future rival expand heavily during the 90s and early 2000s. But this partnership ended in 2006 when McDonald's decided to focus more on its own brand. 2006 was also the year that Chipotle IPO'd, and I'm gonna go over a few reasons why Chipotle stock is gonna be on fire for the foreseeable future. Let's first talk about the actual products that they sell, which is primarily burritos and burrito bowls, without the tortilla, and to a lesser extent, tacos and salads, and recently they started selling larger quesadillas as well. This is food that's served extremely quick. If there's not much of a line, it often takes me less than 3 minutes from start to finish when I walk in and out of a Chipotle store. The food itself is pretty cheap, but I wouldn't exactly call it fast food. Instead, I would consider this more of a fast casual restaurant. You can actually get a decent amount of food for just under $10, but just because the food is cheap, that doesn't mean the ingredients that are being used aren't high quality. Chipotle prides itself on only using meat that isn't filled with non-therapeutical antibiotics or added hormones, and they've even trademarked the brand Responsibly Raised. But this isn't always easy to do, so sometimes when they have shortages, they actually have to give out conventionally raised chicken or beef. Do you think that most customers can actually tell the difference though? Chipotle also actively seeks out suppliers for its produce who emphasize environmental considerations and employee welfare, such as competitive wages, as they believe this is what will produce the highest quality of ingredients for the customer. Now, I'm not going to say that people necessarily care about their health more these days as they did in the past, as I feel that obesity is actually one of the largest issues facing the world that nobody ever wants to talk about. But Chipotle definitely does have a reputation of being a more healthier, fast casual restaurant with higher quality food, though I personally would not consider Chipotle to be healthy food. When we talk about the actual financials for Chipotle, here's where we can really see Chipotle's popularity explode. In their first year as a public company, they were bringing in just $500 million in revenue in 2006. Now, 15 years later, that number has reached nearly $7 billion in top-line revenue. This includes being able to raise their top-line numbers during the 2008 recession and the 2020 C-19 shutdown. Chipotle was actually very well positioned for forced shutdowns, as their digital platform absolutely ballooned in 2020. Almost half of all their sales are now mobile orders that can be paid over the phone and picked up on a shelf as soon as you enter. It's an introvert's dream come true. You don't even have to say hi to anybody. Though sometimes it can be really awkward when you strut on in expecting your food to be on the shelf, and then you realize it's not yet ready, and then you have to make awkward eye contact with the cashier for a few minutes. Chipotle encourages customer loyalty through their Chipotle Rewards program that gives customers points that they can earn toward free items. I've done the math in my head before, and typically it's around every 11 entrees gets you 1 free entree. Chipotle currently has 23 million rewards program members. Chipotle had just 700 locations in 2007. That number has now exploded to nearly 2,800 restaurant locations. Unfortunately, unlike McDonald's, whose true business secret is that they often own the real estate where they do business, Chipotle is just fine leasing its restaurants, as it actually gives them the opportunity to have lower upfront investment costs in high traffic areas such as retail centers or mall food courts. This does mean Chipotle, like many restaurant companies, has just one revenue segment, its actual food and beverage one, as its delivery service revenue will likely take years before it makes any sort of impact. But as we saw before, their main segment has had very impressive growth. And no, charging extra for guac is not its own business segment, though I'm pretty sure the margins on that are insane. The only time we saw a retraction in their sales was during 2015 when they had numerous E. coli, salmonella, among many other foodborne illness outbreaks. These were serious incidents for Chipotle, as thousands of people were affected after eating their food. The negative publicity led customers to temporarily eat elsewhere, and they had a drop in their sales. The company successfully implemented new food safety regulations, and eventually they got a new CEO, and they slowly started winning back customers. Currently, Chipotle might not pay a dividend, but that doesn't mean that they never will. It's still in the growth phase of adding new stores. It actually only has 40 international locations, which means it has plenty of opportunity to grow outside of the US. Management has said they have a long-term target of 6,000 stores in North America, nearly double what it is today. Chipotle said in their latest earnings report that same-store sales grew 30% year over year, which is just phenomenal, and I expect both top and bottom lines to continue going up. Chipotle is also doing a great job not diluting shareholder value, as its shares outstanding has actually decreased in the past 10 years, going from 32 million shares outstanding to now 28 million shares outstanding. Not huge, but that shows the company doesn't need to issue new shares to continue to grow, and that its own cash flows are enough to fund that. During the last 10 years, a $10,000 investment would have grown to just under $60,000. That's a 19.3% average annual return compared to the S&P 500's 16.6% in that same time span. But it's actually the last 5 years where Chipotle has absolutely destroyed the market, returning on average 36% compared to the S&P 500's 18%. This is also the same time period where Chipotle, for the most part, has recovered from its foodborne illnesses controversies that they had in the past, and they have been rapidly growing. However, this increase in share price is sort of bad news if you're not already an investor of Chipotle, as the market cap has now reached over $50 billion, and the PE ratio is a ridiculous 94. And their forward PE ratio is 56, that's not much better. It's obvious Wall Street has already priced in a lot of growth for this company, and I'm not sure adding a smoked brisket to their menu is going to justify this valuation, especially in an industry that has relatively low barriers to entry. I'm not gonna lie, sometimes I cheat on Chipotle with Moe's Southwest Grill. I mean, they got free guac. Chipotle is now trading at nearly $2,000 a share, so I'm sure we're all grateful that most brokerages have fractional trading now. I definitely keep an eye on Chipotle for any future pullbacks that they might have. These videos do take a lot of time for me to research, record, edit, and put together for you. All I ask is that you hit that like button if you've enjoyed it, and interacting with me in the comments below. Remember, my videos are always available in podcast form wherever you get your podcast under the Collect Cash podcast name. If you ever have any video requests or feedback, please let me know in the comments below, and I will buy, stash, and collect cash you later.